Okay, Bismillahirrahmanirrahim. As we have seen, types of incremental analysis, you have accept, reject a special order, make or buy component, sell or further process, repair, retain or replace. Now we look into the last one, that is eliminate an unprofitable business segment or product. So you want to decide whether you want to continue with that product or that particular segment, or you want to eliminate it. Okay, the key focus is on the relevant cost. You have to consider the effect on related product lines, and then fixed costs allocated to the unprofitable segment must be absorbed by the other segments. So we will see into, if you have the fixed cost, what about the fixed cost if you delete this particular segment? So net income may decrease when an unprofitable segment is eliminated. So when you want to make the decision, so the decision rule will be retain the segment unless fixed cost eliminated exceed contribution margin loss. So you are comparing this item. We will look into the calculation to better understand this one. Okay. Venus Company manufactures 3 models of tennis rackets. So you look into this example, Venus Company, they produce 3 models. Okay, profitable lines, you can see Pro and Master, and the unprofitable line is Champ. So should Champ be eliminated? So you have 3 product lines, or 3 tennis rackets, 3 types of tennis rackets, 3 models, Pro, Master, and Champ. If you simply look here, you can see that Pro and Master are giving you profitable or are making profits. They produce a positive net income. Whereas for Champs, you incur a negative net income or incur a net loss of 20,000. So you can see this one is the sales, and then you have your variable cost. This one is your contribution, less your fixed cost gives you your net income. Hopefully you still remember what we did under the CVP analysis before. In the CVP analysis, when we want to make decision, you look into the contribution. So hopefully you still remember about the contribution. So under CVP analysis, we have looked into sales, less your variable cost give you your contribution. And then less your fixed cost give you your profit. What's the use of the contribution? Contribution is being used to cover your fixed cost. If you have extra, that will contribute to your your profit or your net income. Okay, so we have looked into the example. So make sure you know sales less your variable cost gives you your contribution, less your fixed cost give you your profit. So in this case, you can see sales less your variable cost gives you your contribution. So this one is giving you positive contribution, and then you incur fixed cost for Pro 80, Master 50,000, and Champ 30,000. So instead of getting a 240,000 for Pro and Master, now you have a reduction in your net income by 20,000 because Champ is giving you a net loss of 20,000. So your total net income is 220,000. So the question is, should Champ be eliminated? That means you want to delete this product or this product line or this model, then you just concentrate on these two. So in order for you to make that decision, you look into the incremental analysis. So you prepare the income statement, look at what's the effect if you were to eliminate your if you were to eliminate Champ, what's the effect on Pro and Master? So you have your sales just now, 800,000, 300,000 for Pro and Master. So this one, Pro and Master, 800,000 and 300,000. And then you incur variable cost of 20 and 210. Okay, so you have a contribution margin of 280 and 90,000 for these two product lines. Okay, and then you will get a total of 370. The issue is about the fixed cost. Remember about the fixed cost? Fixed cost you still have to incur if you eliminate that product. So in this case, you have to incur 80,000 for Pro. You have to incur 50,000 for Master. What about the 30,000? This one is a fixed cost. This fixed cost you still have to incur if you eliminate Champ. So that 30,000, so this 30,000 you will share between Pro and Master. So given in the question, Champ, if you eliminate Champ, this 30,000 will be shared by Pro and Master in the ratio of 2/3 and 1/3. So this one, how do I get the figure? From the question. You can refer to your textbook. In your textbook, it is mentioned that if this item is being eliminated, then the 30,000 will be shared between pro and master in the ratio of 2/3 and 1/3. So 2/3 of 30,000 gives you 20,000. And then, sorry, 30, yes, 30, give you 20,000. Originally, your fixed cost is 80,000. For pro, your fixed cost is 80,000. Now you have to take 20,000 of this, so that will give you 100,000. This one, originally, your fixed cost is 50. You have to take a portion of this, that is 1/3 of it, that is 10,000. So 50 plus 10 give you 60,000. So in this case, here will give you 100,000, and this one will give you 60,000. Okay, so you will get a net income of 180 and 30 for pro and master respectively. So here, your contribution margin is 370 and your fixed cost remains at 160,000. What's the effect on your net income? So your net income now becomes 210,000. 210,000. So you compare this one. If you were to eliminate your CHAM, that means now you are left with pro and master. Your net income is 210,000. But if you were to retain CHAM, your net income is 220,000. Okay? So what is your decision? Should CHAM be eliminated? So you look at the total decrease in your net income. So your total income will decrease by 10,000. So in that case, should you eliminate CHAM? So in that case, you do not eliminate CHAM. Okay, you do not eliminate CHAM because your net income just now will decrease by 10,000 if you eliminate CHAM. So you can do the incremental analysis of CHAM. You can get the same results here or the same decision. If you continue, what happens to your net income? If you eliminate, what happens to your net income? So the net income will decrease in this case by 10,000. So your decision is do not eliminate CHAM. Okay, what if now, given that, assume that the 22,000 of the fixed cost attributed to CHAM line can be eliminated if the line is discontinued. Now, this is given another scenario, okay, another scenario. What if that the 22,000 of the fixed cost can be eliminated if you discontinue? How do I know this? You can refer to the textbook in the question. Okay, you can refer to your textbook. Assume the same facts as above, except now assume that 22,000 of the fixed cost attributed to CHAM line can be eliminated if the line is discontinued. So what happens now if you eliminate CHAM? You can save 22,000. Okay, what's your decision now? So if that is the case, you can have a cost savings of 22,000. So if you continue, your cost is 30,000. If you discontinue, you can eliminate 22,000 and your cost becomes only 8,000. So in that case, you will have a net income. The net income increased by 12,000. So your decision will be to eliminate CHAM because your net income will increase by 12,000. So if an unprofitable segment is eliminated, which one will be the answer? Net income will always increase. Variable expenses of the eliminated segment will have to be absorbed by other segments, or the fixed expenses allocated to the eliminated segment will have to be absorbed by other segments, or net income will always decrease. So you look at the fixed expense allocated just now, the fixed cost. The fixed cost will be allocated to the remaining segment. So the remaining segment will need to absorb this fixed cost, okay, if you have an unprofitable segment being eliminated. So that is it about the elimination of a particular segment or a particular product line. So with that, I thank you.